Good morning, everyone. Good evening, good afternoon, whenever you're watching. I hope you are enjoying your day so far. My name is Keanu, and this channel is called DeFiBear, where we talk about some more of the mysteries behind the DeFi world. And today we're going to talk about the biggest crypto heists you've never, or maybe you have, heard of. If you have or haven't, in both cases, please subscribe, drop a comment with some more stories or the things you like, suggestions, anything I can change. I highly appreciate any feedback. But without further ado, let's dive into it, shall we? So, the first heist I want to introduce is the DAO hack of 2016. So, the DAO, or the Decentralized Autonomous Organization, was a revolutionary venture capital fund built on the Ethereum blockchain. It raised over $150 million in Ethereum from investors. However, the creators of the DAO, called Slock.it, they didn't properly manage their, or they didn't properly audit their smart contract, and a vulnerability in the code was exploited, and the hackers stole 3.6 million Ethereum, which was worth around $60 million at the time, which is pretty crazy. So this heist caused a major split in the Ethereum community due to, how things worked. And this led to the ultimate creation of the coin called Ethereum Classic. This event highlighted obviously the risks inherent to smart contracts and ultimately led to the strengthening of the blockchain ecosystem, which is a good thing, obviously. But a major shift happened from collective organizations to direct to investor ICO sales. And you could argue that this event indirectly caused the ICO boom of 2017, 2018, mainly by demonstrating how there is a need for secure fundraising mechanism. And I think this DAO hack also shifted the way Ethereum is these days. And I mean, Ethereum Classic is still out there, but Ethereum is definitely dominated now with the Ethereum ETFs as well. So big hack. Let's go to the next heist, which is a coin check hack from 2018. CoinCheck was one of Japan's largest cryptocurrency exchanges, and it fell victim to a massive heist when hackers tried to steal they succeeded in stealing $530 million worth of NEM tokens. The ticker is XEM. This hack represented one of the biggest thefts in cryptocurrency histories, even surpassing the infamous Mt. Gox hack from 2014. So this breach was actually attributed to CoinCheck's lack of adequate security, and they were storing customer funds on hot wallets, and they were not using multi-signature authentication. So, I mean, yeah, if you're not using cold wallets and you're kind of asking for it, and you'll see that this is a red line throughout these hacks, is the use of hot wallets and them being hacked. But despite the enormity of the theft, CoinCheck managed to reimburse all its customers and they just continued operations. I think they're still alive today. I'm actually not sure. But in any case, this hack was definitely a wake-up call for the industry, and it showed you how important it is to have secure protocols in place if you are a cryptocurrency exchange. Going to the next one is the BitGrill hack in 2018, same year. Another significant but maybe lesser known heist occurred in the Italian exchange, BitGrill. BitGrill is a smaller exchange and they trade some more obscure coins, and lots of traders bought smaller coins on BitGrill just to sell them on a later date when the same coins were launched on bigger exchanges like Binance. Two of those major cryptocurrencies traded on BitGrill were Bitcoin, obviously, and Nano. Nano had the ticker of XRB at the time, and it was relatively a new cryptocurrency, but still heavily traded. The share traded on BitGrill in Nano was still small compared to Binance. I think Binance had 80% of the volume there. But still, the hack that happened with BitGrill coincided perfectly with the exploding price of XRB. Let's look at the chart here, where you can see here the price of XRB or Nano was just, it's not even a cent. But then here on the 1st of February 2018, it rose to a price of $33. So yeah, immense gains in a very short amount of time. Yeah, the founder of this exchange, as you can see here, Francesco Fiorano, I hope I'm saying this right, he issued a statement that revealed that the company's nano wallets had been attacked, and it led to a loss of almost 70 million coins at the time. That stood for $170 million. This incident led to a very prolonged legal battle, with the exchange's founder claiming that the hack was due to a flaw in the blockchain, and then others, mainly the developers of Nano, accused him of negligence or even involvement in the theft. There were some weird events that happened before, like days or weeks before the attack. For example, there suddenly was a withdrawal limit. From usually the daily withdrawal limit was around 10 bitcoins, and then suddenly it was 1 bitcoin. Then they placed a ban on non-European users. They instated a mandatory identity confirmation for all transactional activity. They put some anti-money laundering protocols, and yeah, it's being already true for smaller exchanges. Many users speculated that their investments here were at risks. And then, because of the losses, Ferrano, he tweeted about a temporary shutdown of all suspension and all trading activities on the platform. And then he asked the developers to return the stolen nano coins to their rightful owners. But then the attack on the developers was a bit illogical, as Ferrano's stance was further weakened by questioning. He requested to manipulate the ledger to recover the losses. And he also accused Nano of a double spend attack. Of course, the developers were not happy with this, so they sent out a statement, but then Ferrano didn't want to yield and threatened to go to the police. Yada yada, back and forth. According to the police, it's difficult to determine if the founder of the platform was directly involved in the scam, or it was more to field security measurements on the platform itself. In any case, Firano was later charged with multiple charges of fraud, which included money laundering. So that will definitely not look good on him. I'm not sure if he's in jail right now or what he's doing, but I hope, I feel sorry for the people that lost money in this hack, and I hope justice is served for whoever did it. Going to the next heist, we have the Zaif hack, which was a Japanese exchange. Also happened in 2018. 2018 wasn't particularly a good year for crypto exchanges, apparently. But there, the hack resulted in a loss of $60 million of worth of Bitcoin Cash, and then Monacoin. So the attackers exploited a security vulnerability in the system, and it took the exchange actually several days to realize that a breach had actually occurred. So the breach itself took over 2 hours. Luckily, the parent company of Zaif, TechBureau, they compensated all users, and eventually they also sold the exchange. Zaif still exists today. Following this hack, the Financial Services Agency, the FSA, it's like the Japanese counterpart of the American SEC, the financial watchdog, they launched a series of inspections on different Japanese cryptocurrency exchanges. So that also shows you the impact that this hack heist had on the Japanese cryptocurrency space back then. Here you can also see some of the losses that happened. So here around 6,000 Bitcoin, $38 million, 42,000 Bitcoin Cash, $80 million, and then 6 million Mona coins, $5.5 million. At the time, this was a lot of money, especially for a small exchange. So significant heist here as well. Next up the list, our final heist, it takes place in South Korea, where in 2019, the exchange Upbit was hacked for a whopping $50 million worth of Ethereum. The hackers transferred the stolen Ethereum to an unknown wallet, and despite investigations, unfortunately, they were never identified. They used some kind of phishing and malware attack combination to attack the hot wallets of the exchange. Luckily for the users, Upbit compensated everyone with corporate funds. But again, it shows you how important it is to store your coins on cold wallets and not on hot storage. To conclude this video, I want to show a timeline of major crypto exchange hacks that happened between 2014 and 2019. As you can see, most of them happened between 2018-19. Fortunately, in the past years, cryptocurrency exchanges definitely doubled down their security, hired third parties to audit and look for any breaches and stuff. or flaws. They hold competitions where hackers can find flaws in their system with huge rewards. So it's we are making very good progress, but that does not mean that there's still some bad things happening with exchanges, and that there are risks that are no risks anymore involved in putting your money on exchanges. Look at what happened with the FTX drama. Although that wasn't necessarily a hack, you could see it as a heist by SBF. In any case, it shows you how important it is to again store your coins on cold wallets. I will drop a link in the description from a cold wallet that I'm using myself called Engrave. They're the most secure cold wallet out there. I'll definitely recommend to check them out. But yeah, that was it. Thank you so much for watching. If you did enjoy this content, definitely drop a like, subscribe, and comment. And I hope I will see you next time. Cheers. Bye bye.